Hello everyone, my name is Nitin Nahar. I welcome you all on behalf of JK Shah classes to this amendment video for CA Inter September 2025 exams. Now, let me start with some basics. All the amendments which have taken place from 1/11/2024 to 28 to 2025 are applicable for September 2025 exams. Institute has already released the statutory update. All these are based on that statutory update plus some amendments which have been made effective from 1st November 2024 are already included in May 25 study material. Those amendments are also included. So something which was not applicable for May 25 but was there in May 25 module, that is also included in this. That is the whole picture of these amendments. Now let's start understanding each and every amendment which has happened. Okay. The first one is supply and charge related. Now, when it comes to supply and charge, you need to be very careful with regard to two new negative list entries which have been added. One is related to co-insurance and other one is related to reinsurance commission. Co-insurance and reinsurance commission. Let me explain it to you, then we will come and see this. Now see this carefully. We'll take an example of HDFC Life. HDFC Life is providing service to customer. Now what happens in co-insurance is there are two insurance companies who have agreed with a predetermined condition that there will be a sharing of premium because what is collected from the customers? Insurance premium. Is GST applicable on insurance premium? The answer is yes. GST is applicable on insurance premium. So on this insurance premium, say suppose it is 10,000, GST is charged by HDFC Life to customer. Then there is a predefined agreement between HDFC Life and say suppose LIC that whatever is being sold here, 40% of this will be given to LIC, and if there is a claim arising, then 40% of the claim will have to be paid to the customer by LIC. Now, HDFC Life is called as the lead insurer because customer only knows the lead insurer. They don't know who is LIC. There is an agreement between LIC and HDFC. The speciality of this agreement is it is predefined. Everything is predefined. You very well know what would be the share which will be given to LIC. Even before the issuance of policy to customer, it is very well defined between LIC and HDFC. So 40% of the premium will go to LIC. Now this 40% of the premium which will go to LIC will charge HDFC. This is called as co-insurance premium. And the co-insurance premium which is charged by LIC to HDFC Life will be 4,000 because here it was 10,000 and 40% of 10,000 will be 4,000. Now the question is whether GST will apply on this 4,000 of co-insurance premium. This 4,000 of co-insurance premium, should LIC charge GST to HDFC Life? That was the question. Now, there were a lot of notices issued on LIC and other insurance companies saying that this should be liable to GST. The argument of the life insurance companies was, see, government, I have already paid GST on 10,000. HDFC Life has already paid GST. Then co-insurance is just a part of it, right? So as co-insurance is just a part of it, there should not be any implication on this 4,000 rupees. Would you believe government added this in negative list and said co-insurance premium will not be liable to GST if the lead insurer has paid GST on full insurance premium which is charged to the customer. Again, listen to me very carefully. LIC to HDFC Life. There will not be any GST on co-insurance premium because it is merely a apportionment. Do you agree that co-insurance premium is nothing but apportionment and it was predefined? As it is just apportionment and it is predefined, there will be no GST implication on co-insurance premium and it has been covered in negative list. Clear with this? Yes. Okay. Now you need to be smart in the second one because second one is slightly different. See, co-insurance, there is a predefined agreement that this much money will be shared between LIC and HDFC Life. It is agreed even before the policy is being sold. That's the speciality of co-insurance. The other type of arrangement which is there in insurance industry is reinsurance. Now let me explain you what happens in reinsurance. HDFC Life sold policies to customers and collected insurance premium. Say suppose they collected 10,000. Now this policy is issued by HDFC Life. There is no sharing agreement between LIC and any other company. This entire 10,000 will be kept by HDFC Life. But after some time, HDFC Life realizes that it has issued a lot of policies. Now, when they realize that they have issued a lot of policies, then they understand that this is something beyond our capital. We have issued too many policies. Now, we don't know if all the claims arise together, we will not be able to survive. Then, in that case, they get a reinsurance done. See, what happens in reinsurance? Reinsurance is where some amount of the premium will be shared between LIC and HDFC Life. But this was not pre agreed. This is decided at that point of time. It was not pre agreed. Now, when we say it was not pre agreed, this suffers GST. Say, suppose this is 3,000, GST was being charged on 3,000 and LIC would charge HDFC. HDFC will get ITC, input tax credit of this. So there was no problem. See, reinsurance, the problem was not relating to GST on reinsurance amount. On reinsurance, GST was already being charged. So the problem was not on GST in reinsurance. Now see the difference. In co-insurance, the problem was GST was not being charged here. But in reinsurance, as it happens at a later point of time, GST was being charged on this reinsurance. Now, then what was the problem? See, whenever a company, say suppose HDFC Life, sells insurance, do you agree that they pay part of it as insurance commission to the commission agents or insurance agents? Now that commission which is paid to insurance agent is paid by HDFC Life to get that insurance policy. Correct? Now HDFC Life said, see, I have paid some insurance commission. When I am giving you reinsurance, I should also get some commission because I am giving you reinsurance. Oh, wonderful. See this. LIC is providing service to HDFC Life. Now, HDFC Life is saying, I am also providing services to you, and that is reinsurance. I should get a commission, that is reinsurance commission. Now, see how it is working. HDFC Life is providing service to customer. LIC is providing service to HDFC Life. Now, HDFC Life says, I am also providing you service. I want a 10% commission or a 20% commission on this 3,000, that is 300. This will be my commission. So, HDFC Life also wants some commission on this. Now, the question was whether GST will apply on this 300 as commission. Because government started issuing notices. Department started issuing notices saying that this 3,000 is serviced by HDFC Life to LIC and HDFC Life should charge GST on this. Now that was the issue. CBIC was worried, government was worried because one of the biggest insurer is LIC. LIC had got this notice. Now what should be done? They amended the GST law and said this reinsurance commission will be in negative list. Now please understand, reinsurance is not under negative. Reinsurance commission, careful, reinsurance commission is under negative list. The reinsurance commission which is being charged will not be liable to GST and will not be liable provided LIC has paid GST on full 3000. LIC has not paid GST on full 1000, then in that case 300 will also be liable. So let's understand the wordings of these two entries and try to sum it up. Co-insurance premium is covered by negative list if lead insurer has paid GST on full insurance premium charged to the customer. Again, co-insurance premium will not be liable to GST if lead insurer if lead insurer has paid full GST on the full insurance premium. So if lead insurer has paid full GST on the insurance premium, then in that case, co-insurance is not liable to GST. This is first negative list entry. Second one. Second one is related to reinsurance or reinsurance commission. It is related to reinsurance commission. It is not related to reinsurance. Be careful on this. What is the entry? Listen to me very carefully. Reinsurance commission will not be liable to GST if the reinsurer has charged GST on full reinsurance has charged GST on full reinsurance premium which is charged to the insurer, because who is the main insurer? HDFC Life. Who is LIC? Reinsurer. So if reinsurer has charged full GST on entire premium, then in that case GST will not be applicable on reinsurance commission. So two things are in negative list. One, co-insurance premium and reinsurance commission. Reinsurance commission has one. It is also called as ceding commission. Ceding commission is when I am at this policy, I need to charge a commission. So these two are new entry negative. Again, very careful. Co-insurance premium is outside GST. If lead insurer has paid full GST on the amount charged, and reinsurance premium is liable, reinsurance commission is not liable. The reinsurer has paid full GST on the reinsurance which is charged by reinsurer to insurer. Clear with this? Yes. Okay. Okay, let's have a look at the negative list entry. Two entries have been added. Let's see. Activity of apportionment of co-insurance premium by lead insurer to co-insurer for insurance services jointly supplied by lead insurer and co-insurer to the insured in co-insurance agreement, subject to the condition that lead insurer pays CGST, SGST, UTGST or IGST on the entire amount of premium paid by the, if GST is being paid on the entire premium, and in that case no problem. Okay, then see the second entry, service by insurer to reinsure. insurer to reinsure. Insurer in our example was HDFC Life. Reinsurer was LIC. Correct? Okay. For which ceding commission or reinsurance commission is deducted from the reinsurance premium paid by the insurer to reinsurer, subject to the condition that CGST, SGST, UTGST, IGST is paid by the reinsurer on the gross insurance premium payable by insurer to reinsurer, inclusive of the ceding commission or insurance commission. What will not be liable to the insurance or ceding commission, provided full GST is paid on the entire amount. Here with yes, okay, be very careful on the entry. Now go ahead, have a look at what is co-insurance and what is reinsurance. See, this will not be required for you to remember in detail, but this is what I have told you. Just have a look at these two definitions so that you are very clear on what is co-insurance and what is red. Okay, again, let me explain to you for one last time. See, in reinsurance, what happens? In reinsurance, there is no predefined in reinsurance is decided at a later point of time that HDFC Life wants to give some portion of the risk and rewards. Risk is the insurance claim, reward is the insurance premium to some other company. On reinsurance, GST was being charged. The problem was the reinsurance commission which was being charged. That reinsurance commission not be liable to GST. Then co-insurance is very simple. Co-insurance that there are two insurers. The premium which is apportioned to the co-insurer will not be liable provided lead insurer has paid full GST on the insurance premium charge from the insured. Again, you can have a look at these two diagrams. If required, you can just pause the video and draw this and keep careful. Two things are in negative list. One is co-insurance premium. Second one is reinsurance. And you need to know the wordings of the law. Huh? You need to know this very well. Again, one last time. Co-insurance premium not liable if lead insurer has paid full GST on the insurance premium which is charged by insurer to customer. Second one is reinsurance commission is not liable if GST is paid by the reinsurer on the reinsurance premium being charged without deducting reinsurance commission. Clear? Okay. Okay. Then one more product has been added in 9 subsection 1. See, in section 9 is the charging section. It says GST will be charged based on various subsections. There are 5 subsections: 9.1, 9.2, 9.3, 4, 9.5. There are various subsections. Based on these subsections, we determine whether GST is applicable or not in each case. Now, 9 subsection 1 excludes alcoholic liquor for human consumption. You remember, alcoholic liquor for human consumption is not liable to, correct? Now, this alcoholic liquor for human consumption has one very important raw material called as undenatured ENA or rectified spirit. Now, please understand what would happen. The alcoholic liquor for human consumption, there is no out. Now, one of the key raw materials for alcoholic liquor is undenatured ENA, extra neutral alcohol. The content of alcohol in this is very high. That's why it's called as extra neutral alcohol. Now, this undenatured extra neutral alcohol or rectified spirit is one of the main raw materials to make alcoholic liquor for human consumption. There was a view that GST is applicable on this. Now, please understand, if GST is applied on this, then it creates an issue. What is the issue? If this suffers GST, then this will become a cost to the manufacturers of alcoholic liquor for human consumption because they don't have any output GST. As there is no output GST, this GST charged on purchase will become a cost. If this becomes a cost, then their cost will increase. Now, the main raw material of alcohol for suffering, they have amended 9(1) and said now two products will be under exclusion. First one is alcoholic liquor for human consumption, which is already there. Second one is undenatured ENA or rectified spirit only when it is used for manufacture of alcoholic liquor for human consumption. You need to remember this entire sentence. First of all, what is outside GST? Undenatured ENA or rectified spirit, which is used for manufacture of alcoholic liquor for human. Say suppose this undenatured ENA is used for manufacture of medicines, liable, liable to G. Only when it is used for manufacture of alcoholic liquor for human consumption, then it will be outside G. Only one product for its specific use is outside GST. What is that one product? Undenatured ENA. It is outside GST. When is it outside GST? Only when it is used for manufacture of alcoholic liquor or human consumption. Very careful, very smart with the wordings, because they will give you undenatured ENA, but they will say it is used for manufacture of alcohol, which is used for medicine. That will be liable. When is it not liable? Used for manufacture of alcoholic liquor, human consumption. Then is not liable to. So again, with me, 8223, so that you remember it very. Undenatured DNA, extra alcohol or rectified spirit used for manufacture of alcoholic liquor for human consumption. So you know a term called as non-taxable supply. Non-taxable supplies are supplies which are not leviable to G. This non-taxable supply earlier had 6 products: 5 petroleum products, 1 alcoholic liquor, human consumption. Now non-taxable supply has 7. 5 you already know: petrol, high-speed diesel, natural gas, aviation turbine fuel oil. Now you have 2 alcoholic liquor for human consumption, and second one is undenatured ENA or rectified spirit or manufacture of alcoholic liquor for human consumption. Be careful about this particular point. Very important from examination point of view. Okay. Then let's move to time of supply and days of supply. Time of supply, one very basic amendment has happened. Let me explain you the background behind. See, time of supply for goods, RC. and for services RC. So let me tell you what was the time of supply earlier. Then we will see what has happened now. See, goods RCM 31st day from date of invoice or date of payment or receipt of goods, whichever is earlier. Correct. This was the time of supply. Now for services, 61st day from date of invoice or date of payment, whichever is. This was the time of supply. Is it, sir? Yeah. You remember this? Yes. This was the time of. Correct. Now, there was one problem. What was the problem, sir? The problem was, see, if supplier is registered person, then supplier will issue invoice. Even if it is RCM case, if supplier is registered person, then supplier will issue. If supplier is unregistered person, then the law said recipient will issue a self invoice. Recipient will issue a self invoice. Who will issue a self invoice? Recipient will issue a. Now, there was a problem. Now, when recipient has to issue a self invoice, from which date do we count? 61st day from date of invoice. Now, from which date do we count this? Because in this, when supplier is unregistered, see, when supplier is registered, no problem. Supplier will issue invoice from that count. What if supplier is unregistered? Where do we count? Problem. Now, what they did is they made two bifurcation. They said first, if supplier is registered person, then in that case, same, the first day from date of invoice or date of payment, whichever is earlier, same thing will apply. Now, if supplier is unregistered, then time of supply will be date of invoice issued by recipient or date of pay, whichever is earlier. So careful. This is the amendment. So if you read both of these together, what will be the time of supply? 61st day from the date of invoice of supplier or date of payment or date of issue of invoice by date of invoice issued by recipient is early. So now you compare three things. First one, second one, third one. This is what you compare. Get your time of supply. But you can learn it this way so that it becomes easier for you. This part. What does it say? If supplier has issued the invoice, 61st day from the invoice issued by supplier or date of payment. Recipient has issued invoice. Yes, date of invoice issued by recipient or date of payment, whichever is early. Clear with this? Yes. Careful on this part. They can ask for the examination. Either they can ask you this or they can ask you. You need to be careful. You need to know this as. Now, sir, when should recipient issue invoice? That is also now defined in the recipient has to issue invoice within 30 days from the receipt of service. But be very careful. Here, the law does not say due date to issue invoice by recipient. Law says date of issue of invoice by recipient. which can be any, because it is date of issue of invoice. Sir, what if he does not issue within 30 days? If he does not issue within 30 days, then there will be some penalties will apply. General penalties, etc. are there. That is not in your syllabus. You need to know that what is the time of supply. Time of supply, if supplier has issued invoice first day from the date of invoice issued by supplier or date of pay. Yes, recipient has issued invoice, then in that date of issue of invoice by recipient or date of payment. Now notice one thing, they have not made any changes to goods RCM. Maybe the law believes that their receipt of goods is already there to take care of any such possibility. We don't have to amend that. Goods RCM, there is no, but see, this point is for both. In whenever supplier is unregistered, whether it is for goods or whether it is for service, who has to issue the invoice? The invoice has to be by recipient. Is there, but law has not defined separate time of supply for goods RCM. Goods RCM even today remains same. Service RCM there has been. Better you note this down. You pause the video and note this down. Then we will read the entry. Okay. I hope you paused the video and you have done it. Now let's read. Section 13, time of supply in case of RCM, where invoice is by recipient. The time of supply under RCM was date of payment or 61st day from the date of invoice issued by a supplier. If the supplier is unregistered, they are not required to issue an invoice. Correct, na? If supplier is unregistered, there is no question of issuing the invoice. In such cases, the recipient must issue a self invoice. Time of supply for services under RCM has been amended to cover this situation as well. Therefore, time of supply will be earlier of, circle earlier of date of payment, 61st day from the date of issue of invoice or any other document by the supplier. If supplier is to issue invoice, even today it is 61st. It was there earlier. Date of issue of invoice by recipient, circle this, where the invoice is to be issued by recipient. Oh, when is invoice to be by recipient? Invoice by recipient only when supplier is unregistered person. Be careful. The supplier is unregistered person. Who will issue the recipient? Will issue a self. Clear? Okay. When there is when it is not possible to determine the time of supply in the above provisions, date of entry in the books of recipient used. This is same as earlier. There is no change in this particular point. Done? Okay. Now, there is one circular which is issued for place of supply for online services. See, online money gaming or supply through e-commerce operator by e-commerce operator, supply of service, there used to be a problem. See, all these services get covered under place of supply section 12, and 12.2 says if service is provided to registered person, then the place of supply will be location of registered person. Correct. If the service is provided to unregistered person, then the place of supply will be location of recipient. But if not available, then location of supplier. Correct. Remember this. You have the location of the recipient. Good. Don't have the location of, then in that case location of supplier would be Correct. Now, there used to be this problem as to online money gaming industry. They used to say we don't have the location of recipient. Now, if they say we don't have the location of recipient, then what would be the place of supply? If they say we don't have location of recipient, the place of supply will be location of supplier. In that case, if they adopt this, then there is a problem. The problem is the tax is not flowing to the recipient state correctly. Correct. Tax is not flowing to the recipient state. Recipient state should get the tax, right? Correct. Now recipient state was not getting the tax in this case. Then what should be done? Government has issued this circular saying that recipients have to, sorry, suppliers have to collect location of recipient, and merely collecting the state of recipient is sufficient. So what has to be collected? State of recipient, so that tax flows to the correct state. I'll give you an example. Say suppose there is an online money gaming supplier who is in Maharashtra. There is a person betting from Karnataka. Now this supplier will say, I don't know where is the recipient. I have not taken his address. Now if they don't take the address, then what will be the place of supply? If they don't take the address, then the place of supply will be Maharashtra. The tax will remain in Maharashtra. But as per consumption principle, who should have got the tax? Sir, Karnataka should have got the tax. Correct. Correct. Na Karnataka should have got tax. Now, why did this circular? Government has given one instruction. All these suppliers have to collect details of recipient. They have to collect the state of recipient. Why is it important to collect state of recipient? So that the tax flows to the correct state. So this circular is more of to make the person understand that it is important to follow consumption principle. Plus, when you see invoicing chapter, na, you will find a point that it is mandatory for these people to collect the name of the state. But still, some suppliers were not collecting. That's why CBIC had to issue a circular that please collect the name of the state. I mean, not please, have to collect the name of the state of the recipient. Let's have a look at the circular. Legal provision. 12.2 states that when services are supplied to a registered person, place of supply will be of recipient. If it is to a unregistered person, place of supply will be location of recipient if address is available on record. Location of supplier if address is not available. Issue incorrect recording of place of supply. As per the law, suppliers must record the, the recipient state name on the invoice and declare place of supply of recipient location under 12.2. However, many suppliers are incorrectly treating place of supply as their own location under 12.2. This misclassification is particularly prevalent in online services like OIDR. OIDR, you read at final. Digital subscription, online money gaming, leading to revenue misallocation among states. Problem was the states are not getting the taxes correctly. Clarification. Your uniform code clarifies that suppliers must mandatorily record the state name on the invoices regardless of the transaction value for all online services tied to registered recipient. This requirement applies to all online digital YDR, online money gaming, OTT, mobile-based digital service apps. Supplier must establish mechanism collect recipient details before complete the transaction. Failure to do penalty. are 120. This penalty, but anyways, it's part of the circular. So even here, yes. Okay. Okay, let's move forward. Exemptions. Now, exemptions, some small changes have happened. Exemption in some entries, but one major section which has been added is section 11. Now, I'll give you an example. Say, suppose entire steel industry was paying 5% GST on scrap. Steel industry scrap, they were paying 5%. Entire steel. So it was a business practice for entire steel that scrap 5% GST is applied. GST officers issued notices saying no, it's 18. And then once officers issue a notice, then the matter will be litigated. Litigated meaning it will go, hearing will happen, then first level of appeal, high court, and matter will go. Now say suppose the high court decides that it will be 18%. So the position taken by entire industry is wrong. Now, if this happens, tell me what is the impact? This happens. What is the impact? This entire industry will have to pay 13% differential because 5 they have collected, 18 what High Court has said, they will have to pay 13% plus interest plus penalty. Now, if the entire industry was doing, tell me whether cause a lot of loss to the entire. The answer is sir, cause a lot of loss to the. So what should be done? Now government has the power. The power, the power is government can waive off fire. Government can waive off this entire thing. What can they waive off? They can waive off this entire 13%, which was due to a practice. So if something was due to an industry practice, government has a power to waive off entire liability. No one will have to pay this. Therefore, no one will have to pay this. This is a special power of government where they can waive off a liability was a industry. This has been as a section that if there was a non-levy or a short levy, understand, there was a non-levy or a short levy, then that non-levy or short levy can be completely waived off by government, provided it was a industry practice. If it was a industry practice, then government has a power to waive off that entire liability. Is it a good point? My understanding, a good point. It's a point which help the industry in case something like this happens. Sir, has government notified anything in this? At present, only one power has been added, and you are only going to learn that now. Let's have a look at this section 11A. Now, section provides for normal exemption. 11A provides for special added. 11A added in the okay. Power not to recover GST levied or short levied as a result of general practice. It was a general practice, government is waiving it. Notwithstanding contain powerful, if government is satisfied that the practice was or is generally prevalent regarding levies. Same point is there in SGST law as well. Generally prevalent levy of on supply of goods or service, and such supplies are or were liable to central tax in accordance in cases where according to the said practice central tax was not or is not being, so it was liable, but in the practice entire industry was not charging, or is a higher amount of central tax than that was or is being levied in accordance with the said practice. So in said practice they were charging less, but actually it is more. The government may, on the recommendation of council, by notification in the official gazette, direct the whole of central tax payable on such supplies, or central tax in excess of that payable for such supplies, but for the said practice shall not be required to be paid in respect of supplies on which central tax was not or is not being levied, or was or is being short levied. Earlier, short levy was happening on the said practice, so that short levy will be clear. Yes, this is a good point, very good point from the point of view. Government can use this power, waive off something here. Okay. Similar amendment has been made in IGST Act. 6 has been added. IGST 6 deals with normal exemption. 6A is power. New entries or changes in entries. See, this National Skill Development Corporation was added last time. You are aware of it. Now, what is the amendment? You just see this part. This is the amendment. So, a training partner who is approved by NSDC, training partner approved by NSDC. Now, when they reworded this National Skill Development Corporation, they mistakenly removed training partner exemption. Now, all these training partners then wrote to NSDC saying, please tell the finance ministry they have deleted our name. Training partners are approved by NSDC. Training partners were getting the exemptions and suddenly their name was deleted. Then government added their name again saying that training partners approved by National Skill Development Corporation not be liable to GST. So this is the amendment portion. They can ask you, they will frame a question saying that training partner approved by NSDC collected 5 lakh rupees. Whether GST will apply? The answer is no, GST will not be applicable. Okay. Then in this entry, there's only one or which is added. Instead of and, they have mentioned or. Why, sir? See, they provided exemption for meter change charges, meter renting charges, testing of meters, duplicate bill charges. All these are ancillary service to electricity. All services which are ancillary to electricity, they also should enjoy correct. Ancillary services to electricity all are exempted. Is it, sir? Yes. All services ancillary to electricity are exempted. Now, who will get this exemption? The entry said transmission and distribution utility. That means exemption will be available only to a person who is a transmission utility as well as a distribution utility. What if someone is doing transmission job and someone else is doing distribution job? Then in that case, what will happen? For that, now government has written exemption will be available either to transmission utility or to distribution utility. Both will get the exemption. So only transmission if you are doing, you will still get the exemption. Only distribution of electricity, if you are doing, you will still get the exemption. So the exemption will be available to transmission utilities or distribution utilities. Clear? So this or has been added. Then one entry has been added: insurance services provided by Motor Vehicle Accident Fund. Now, what is this Motor Vehicle Fund? See, this Motor Vehicle Accident Fund is set up under Motor Vehicles Act. Now, each insurer, all the insurers contribute some money to this fund. Now, whatever they contribute to this fund, this is for third party insurance, third party vehicle insurance, meaning, say, suppose because of one person, some third party suffers a damage, then that third party is compensated from motor vehicle accident fund. So, whatever motor vehicle accident fund collects from various insurers, whether GST will apply on that, GST will not be applicable on that. That is what is said here. Service provided by Motor Vehicle Accident Fund, constituted under Motor Vehicles Act, against contributed by insurers from the premium collected for third party vehicle. So insurers contribute some premium to this motor vehicle insurance fund. Whatever motor vehicle insurance fund is collecting, whether GST will apply on that? The answer is no. GST will not be applicable. Clear? Okay, this is an interesting, sir. First, let me give you a background. The local authority taking service of pair of street light exempt. Is it, sir? Yeah. Because the repair of street light is a constitutional function, the 243G or 243 of the Constitution. As it is a constitutional function, government has given an exemption. Now, this exemption is available for two things: pure services or composite supply where goods element does not exceed 25%. You remember this entry? That service provided to government or local authority for a constitutional function, they enjoy a exemption if it's a pure service or composite supply where goods element does not exceed 5%. You remember this entry? Yes. Okay. Now what is the amendment? Sorry, what is the circular? See, there is Delhi local authority who has got a new premise, headquarters. Now, for their headquarters, they are taking management, facility management services, cleaner, cleaner for Delhi local authority headquarter. Question: Delhi local authority takes facility management services for its headquarter, whether it is a constitutional function and whether this will enjoy an exemption as a constitution. Maintaining your own headquarter, is it a constitutional function? Or repairing street light is for public, that a constitution? Sir, maintaining your own, no sir. Obviously, maintaining your own facility is not a constitutional function. This will be taxable for its own headquarter, will be taxable because the exemption, if is when local authority takes some function, takes some services for functions which is entrusted under the constitution, only those will enjoy an exemption, not here with. Yes. Okay, let's see. And you can pause the video and draw this first. You draw this in this space, then we will read. Okay. clarification on GST applicability on facility management service for MCD headquarter. What is MCD? Municipal Corporation of Delhi, local authority, Delhi. Clarification was required on whether GST exemption applies to facility management services provided to MCD headquarters, particularly in the context of municipal functions under 243W of the Constitution. The GST exemption applies to composite supply of goods and services to government or local authority provided value of goods does not exceed 5% of total supply and service related to municipal function as per 243W of the Constitution. However, it is clarified that facility management, housekeeping, maintenance, horticulture provided to MCD headquarters not fall within the scope of municipal. GST will be applicable at the CD will not get exemption. Own headquarter facility management. But what if they repair a maintenance of parks? Now this is specifically to MCD, but it will apply to all the municipal authorities. See, they will give a clarification for one, but it is applicable for everyone. Clear? Okay. Now very important, very very important. First, second one, both are very important. Need to be strong with the law. Now, see, first let me tell you what was the entry earlier. Sponsorship provided by any person to partner firm, comma, body corporate is covered by RC. This is the entry. Sponsorships provided by any person to partnership firm or body corporate is covered by RCM. Correct. Now, what they have done here, they have mentioned by any person other than body corporate. By any person other than body corporate. That means if the supplier is a body corporate, forward charge. If supplier is body corporate, it is excluded from RCM. Will be a case of forward charge. So be very careful on this. They will try to test you on this. What they will do? Institute will start the question with a limit. Body corporate providing various services. One service, sponsor service provided to someone. Now, when sponsorship service is provided to a body corporate, it will be a case of forward charge because the supplier is a body corporate. Whenever supplier is a body corporate, a case of forward charge. Again, whenever supplier is a body corporate, it will be a case of forward charge, irrespective of who is receiving the service. It does not matter who is receiving the service. If the supplier is a body corporate, then in that case, it will be a case of forward charge because in RCM entry, they have said other than body corporate. So be very careful on this entry. High chances that they ask you this entry. So be very careful. The supplier is a body corporate, then in that case, forward charge for sponsor service. Now you remember this very well because anything which is not getting covered under RCM will be a case of forward charge. It is possible that supplier is not liable to register and that's why there is no liability. But that is a different thing. You need to be strong with the combination. If you are strong with the combination, anything other than this will be a case of forward. Let's see the entry. The entry says sponsorship service provided by a person other than body corporate to a partnership firm or body corporate. If this combination is met, only then it will be a case of RCM. All other cases forward charge. Like whenever supplier is body corporate, forward charge. Whenever recipient is sole proprietor, forward charge. Whenever recipient is a trust, in a case of forward. Yes, one change. Second one, commercial property. Commercial property. Commercial property renting. Let me tell you how was the entry before amendment. Before amendment, commercial property renting RCM will apply only when a combination. What combination? Supplier should be unregistered, recipient should be registered. If this combination is met, that case be a case of RC. Now what they have done, they have added other than composition D. Other composition means if composition dealer is a recipient, not be a case of reverse charge of forward. Ah, forward charge GST will not apply because if the supplier is unregistered, then he is not liable to register. There's no, he's not a taxable person. As he is not a taxable, there is no, that's true in all the cases. I'll give you a simple example. T is liable to GST. But if it is provided by a tea stall, chai wala, who is unregistered, if a chai wala is unregistered, then there is no tax at all. That is true for all cases. That if the supplier is unregistered, then there is no question of GST. It's true in all cases. But understand one thing, RCM will apply only when he is a registered person other than composition. Yes, very careful with regard to these two changes. What are the two changes? First one, sponsorship service supplier is other than body corporate. That means if the supplier is a body corporate, the supplier is a body corporate, then in that case, RCM will not be applicable. And commercial property renting, if the recipient is a composition dealer, again, RCM not apply. Clear? Yes. Okay, let's have a look at the entry. RCM removed for sponsorship service provided by body corporate. See the old entry. Sponsorship service provided by any person to partnership firm or body corporate. New entry. New entry says sponsorship service provided by any person other than body corporate to partnership firm or body corporate. Okay, renting of commercial property to composition taxpayer removed from RCM. Old entry was renting of immovable property other than residential, commercial, provided by unregistered person to registered person. Now, new entry, service provided by renting of immovable property other than residential dwelling provided by unregistered person to registered person other than person who has opted to pay tax under composition. You have opted to pay tax under levy, you are outside RCM for commercial property. See, this is there only at two. Composition dealer is excluded as a recipient. First, commercial property. Second, security. Are the two places. composition dealer is removed from RC, and this other than body corporate, which is supplier other than body corporate, they're at three: security service of mode. The three, where if the supplier is body corporate, then RC. Okay. What you can do is you can put this down. You can pause the video and note this down so that you are very comfortable. Changes. Okay. Okay. Now let's have a look at one circular, Delhi Development Authority. Now it's a very simple circular. See, I'll tell you a very simple case. Local authority to business entity is taxable under RCM. You are aware of authority, government or local authority to business entity. Business entity is responsible to pay the tax. Correct. You are aware of this. What about Delhi Development Authority? In every state, now there is one development authority who does plot allocation, industrial plots or commercial plots or residential plots. Like that, in Delhi, we have Delhi Development Authority. In Bangalore, we have Bangalore Development Authority known as BDA. In Maharashtra, also there is an authority. In Gujarat, also there. So, whether Delhi Development Authority to business entity is taxable under RCM. That means, is Delhi Development Authority, is it a local authority? CBIC has said no, taxable under forward charge. Why? Because Delhi Development Authority does not contain municipal fund account. Therefore, there are only those where the fund is managed as a municipal fund or a local fund. These authorities have full freedom to utilize the money, charge, consider. They don't operate as public authority. Hence, Delhi Development Authority not a local authority. Whatever they are providing as will be taxable under forward charge. You read this yourself and note this down. And okay, input tax credit, one very small change has happened. There was a point which said tax paid under section 74, 129, no ITC. Now it says any tax paid under section 74 to financial year 20. Because there is one new provision added, 74A, that anyways you read at CA final. But if tax is paid under section 74, then for ITC it will be block credit. 129 and 130 reference has been deleted because technically 129 and 1 there is no tax at all. So it was actually a waste. Now government has understood that 129 and 130 are wrongly mentioned, so they have deleted. Any tax paid under 129 130 was block credit. But there was no tax under 129 and 130. So do we read 129 130? Okay. Now the next clarification, mark it as important for your exam. Now listen to me very carefully. See, there are totally 6 conditions to avail ITC. You remember? There are 6 conditions. First, you have the voice, debit note, or tax payment document. Second, you have received the goods or services. Third, supplier has paid the tax to government subject to section 41. Fourth, you have filed a valid return. Fifth, supplier has filed GSTR 1 and it is reported in GSTR 2B. Voice or debit note comes in GSTR 2B of the recipient. Sixth, ITC is not restricted under section 30. These are the six conditions. Correct? Yes, sir. Now, if any of these six conditions are not satisfied, you will not get IT. You are aware. Yes. Now, what is the meaning of received goods? This has been clarified in a circuit. See, this is the factory of Hero Limited. Hero Limited sells bikes to dealer. Correct. Now, when can you say goods are received by dealer? There is something called as X works contract. X works contract meaning the risk and reward of the vehicle will be on the deal once it has left the factory gate. So, from the factory gate of Hero till the dealer, the risk and rewards is on the dealer. So, if any accident happens here, dealer will have to file a claim with insurance. See, factory will help in arranging transport. Factory will help in arranging insurance, but Hero Limited will not be responsible in case of X works contracts because in case of X works contracts, the property in the goods gets transferred to dealer. Property in the goods gets transferred to the dealer at the factory gate. Now the question is, when the property is transferred at factory gate to the dealer, when can dealer claim ITC? Can he claim ITC when invoice is issued here or when he actually receives the goods physically? When can you say that the dealer can claim ITC? Because one of the conditions to avail ITC, you have received the goods. When can you say that dealer has received? This is clarified by CBIC. CBIC has said in X works contracts, as the risk is transferred here itself, dealer has actually received the goods once the goods are handed over to the transporter, because the goods are handed over to the transporter on behalf of the dealer, the factory gate. As it is handed over at the factory gate, dealer will be eligible to avail ITC once the goods have left the factory of Hero. Right? They will ask you this question. They will say January X works contract property is transferred, but physically the goods are received in February, and they will give you a January question. Can you claim ITC on that? The answer is yes, you can claim ITC on that because technically you have received the goods in January. Yes. Okay. Let's read the circuit. And you can draw this and keep that X5 works contract goods are said to be received at the factory gate. Clear? Okay. Okay, you can pause the video and draw this. Now let's have a look. Clarification on ITC availability. under 16(2)(b) for X works contracts in the automobile industry. Though the circular is for automobile industry, it will apply throughout. Contracts between automobile dealers and OEMs. OEM in our example was Hero Limited, are often based on X works. Property in goods passes to the dealer at the factory gate of the OEM when handed over to the transport. OEM was Hero Limited. Transport and insurance may be arranged by OEM. Hero Limited may arrange transportation on behalf of the dealer, but claims for loss must be lodged by the dealer. Dealer avail ITC on the date the vehicles are built and handed over to transport. However, some authorities believe ITC can only be availed after physical receipt of vehicle at the dealer's business premise, leading to show cause notice for wrongful availment of ITC. Clarification: 16(2) is a non-obstant clause, notwithstanding anything, listing conditions for ITC availment. 16(2)(b) states ITC can be availed only when the goods are received. 16(2)(b) explanation provides for deemed receipt of goods when supplier delivers the goods to recipient or any other person on their direction. The direction must be given before or during movement. Goods may be delivered via transfer of document or title. Bill to ship to transaction. Bill to ship to, when can you say the goods are received? When the person to whom it was shipped has received the goods. So recognizes under X works contracts, goods are handed over to transporter at the factory gate. Transportation and insurance are arranged by dealer. Dealer is are arranged on behalf of dealer. Dealer is responsible to file the claims. Thus, property in goods transfers at the factory gates. Goods are deemed to be received by the dealer at this point, even though there are two exceptions that ITC would not be available in the following cases. If goods are diverted for non-business purposes, you'll not get ITC. Goods lost, destroyed, stolen, or written off, ITC will not be available. That is anyways log credit, goods lost, destroyed. If that happens, then you have to reverse ITC. Okay. Okay. Then coming to registration, payment of GST, TDS, TCS, and then you have invoice and return. Okay. Registration, section 30. See, you need to understand the details of this particular provision very well. See, 30 deals with revocation of cancel. Now, there was a lot of issue with regard to revocation cancelling. What is the time limit? How should the other conditions? Should the returns be filed within? All these were litigated a number of times in High Court. And it is not practically possible to change the section every time because section requires amendment of the parliament. So as this was the difficulty being faced, government now has incorporated 32, saying that revocation of cancellation will be subject to such conditions as may be prescribed. So section is giving power to the rules to make the rules. And in rules, same points which were there earlier, same points are. So technically nothing has changed. But everything, instead of coming from the section, now all these conditions, etc., come from rules. So in future, if government wants to change anything, they can directly do it through the rules, which can be done by central government rather than amending the TGST Act. Clear with this? Yes. Section 30 New proviso in 30 subsection 2 has been incorporated so as to provide for an enabling clause, prescribe conditions and for revocation of cancellation. Provided further, revocation of cancellation of such registration shall be subject to condition and such restriction as may be prescribed. Government has the power to prescribe various conditions and restrictions. Clear? Okay. So this is a new power. Okay. Then additional proviso is inserted in Rule 8.4 saying that any person who has not opted for Aadhaar authentication shall be followed by taking photograph of the applicant along with verification of original copy at the facilitation centers. So biometric Aadhaar authentication will be done for such person. Is it, sir? Yes. It would be mandatory to do biometric Aadhaar authentications for such persons. That has been mandated very clear. Okay. Okay. Then rule 138, this is e-way bill. You remember one point in e which used to say that two cases mandatory principal to job work, interstate move and interstate handicraft goods, even if they are not liable to register. Because see, interstate handicraft goods, there is no need to register. You remember this. Interstate handicraft goods, no need to register up to 10 lakh 20. But interstate handicraft goods, if there is a movement, then it is mandatory to generate e-way bill. Now the problem was, though it is mandatory to generate e-way bill, there was no process as to how do I take enrollment on the e-way bill website. Now they have said that anyone who falls under this category or an unregistered person, because for unregistered person it is optional. An unregistered person who wants to generate e-way bill, he can take a enrollment number, the e-way bill website, and by taking that enrollment number, he will be to generate e-way bill. So, can an unregistered person also generate e-way bill now? The answer is yes. An unregistered person will also be able to generate e-way bill now. Let's see. Information to be furnished prior to commencement of movement of goods and generation of e-way bill. A proviso has been inserted to lay down that unregistered person who is exempted from obtaining registration under 24. Because 24 says compulsory registration for interstate and generates e-way bill for interstate supply of movement of handicraft goods irrespective of value of consignment shall submit the details electronically on the common portal. So he will submit the details on the common portal in form GST ENR 03, either directly or through a facilitation center. So he will have to submit this enrollment. ENR is enrollment form. Similarly, an unregistered person who opts to generate e-way bill on the common portal will also submit this form on the common portal. Once details are validated, unique enrollment number will be generated and communicated to registered person. And using this unique enrollment number, he will be able to log in and he will be able to generate e-way. Is it, sir? Yes. So now, can an unregistered person also generate e-way bill? The answer is yes. It is permitted. No. Clear? Okay. And wherever there was reference to section 73 and 74 in payment chapter, all those places you will also include reference to section 74A. Section 74A. So wherever 73, 74 was mentioned, 73 deals with notice for other than fraud, 74 for fraud. 74A is now a mixture provision which deals with both fraud and other than fraud case. Wherever 73 and 74 is there, add this 74A. Do we learn this 74A, sir? No. This you learn it finally. Okay. Okay. Now coming to the last one. This you are already aware. What is the time limit to issue invoice? In case recipient has to issue a self invoice. If recipient has to issue a self invoice, what will be the time limit? This was not defined in the law. Now it is defined. If the supplier is unregistered and it is a case of RCM, who has to generate invoice? Supplier unregistered. Case of RCM, recipient has to make a self invoice. Now recipient has to make a self invoice within what time? He has to make invoice within 3 days from receipt of 3 days from of clear. Yes. Okay. Plus, if the uh, if it's a case of government department who have taken registration only for TDS, they will be regarded as if they are unregistered person. That means recipient will have to generate a self. Let's read it. Section 31 of CGST Act has been amended corporate enabling provision for prescribing time limit for issuance of invoice by recipient in case of reverse charge mechanism. Further, an explanation has been added to provide that supplier who is not registered shall include supplier who is registered solely for deducting tax, like CBI, etc. CBI is registered only for TDS. You remember TDS provision. Government departments take TDS registration so that whenever they receive something where contract value is more than 2.5 lakh, that TDS. Those who have taken registration only for TDS, for this provision, they are regarded as unregistered person. Rule 47A has prescribed that registered person who is liable to pay tax under 9394 shall issue invoice within a period of 30 days from the receipt of supply of goods or here. Okay. Now, last amendment is section 39 GST return. One very small change has happened. That change is, see, TDS people, those who are required to deduct tax, they were saying that, say, suppose 1 month no TDS, then we are not required to file GSTR 7 because a person who is liable to TDS files GSTR 7. They said that there is no deduction. Why should we file a return? Law has been made to say that even if there is no deduction, you will have to file a nil return. The late fee for that will be nil. If you don't file it, late fee is nil. But you have to file a nil return irrespective of whether deduction is there or not. Even if there is no deduction, nil return filed. Let's see. 39.3 has been amended so as to mandate that the electronic furnishing of return for each month by registered person required to deduct tax, irrespective of whether any deduction has been made in the said month or not. It also empowers the government to prescribe by rules, form or manner and time. What has government prescribed? R7 has been clear with this. Yes. Okay. So let's do a quick recap of all the amendments which have happened. First one. Hmm. Two entries. Two entries added. Two entries added in negative list. One, co-insurance premium is outside GST if the lead insurer has paid full GST on the insurance premium charged from the insured. Second point, reinsurance commission if the reinsurer has paid full GST on the reinsurance premium charged from the insurer. Then one new product has been added from the exclusion in GST. Alcoholic liquor for human consumption was already there. Now, undenatured ENA, undenatured extra neutral alcohol or rectified spirit used for manufacture of alcoholic liquor for human consumption. Careful. Then, time of supply. Time of supply in case supplier is registered and it's a case of RCM, 61st day from date of payment, 61st day from date of invoice or date of payment, whichever is earlier. If supplier is unregistered, who has to pay the tax? Recipient has to pay the tax. Who has to raise a invoice? Recipient has to do a self invoice. When recipient has to do a self invoice, date of issue of invoice by recipient or payment date, whichever is earlier. The time limit to issue this invoice is 30 days from the date of receipt of goods or services. No change in goods RCM. Be very careful. Place of supply. Online service providers, be careful. Collect the name of the state, and that collect the name of the state of the recipient will be regarded as place of supply so that the tax flows to the correct state. Exemption 11A, if there is a industry practice due to which there is a non-levy or short levy, then government can waive off that entire tax or to the extent short levy was happening. NSDC training partners are now eligible for exemption. Transmission or distribution utilities both will get the exemption for metering, rent, or testing of equipments, duplicate bill charges, and other ancillary services. Delhi Development Authority, I am MCD, Municipal Corporation of Delhi, will is a local authority, but they will get exemption only for services which are for general public, the 243G, 243W, not for their own facility management services for their own headquarters. RCM, be very careful. Sponsorship services provided by other than body corporate to partnership firm and body corporate is under RCM. That means if supplier is body corporate, no RCM for sponsorship services. Commercial property renting. If the recipient is a composition dealer, again, no RCM. Delhi Development Authority is not a local authority because it does not have a municipal fund. It's a separate authority, it's a governmental authority. Block credit 129 and 130 references are deleted. When can you say that the goods are received? You can say when the goods are received. If it's a X works contract, the moment the supplier gives it to the transporter at the factory gate, the risk and rewards transfer, and the moment risk and rewards transfer is deemed that you have received the goods, you can avail ITC as a recipient. Section 30 enabling provision has been added so that government can prescribe some conditions for applying for revocation of cancellation. Registration application, when we talk about registration application, if Aadhaar is not authenticated, then it has to be followed by taking photograph. Biometric Aadhaar authentication will be done. Taking photograph will be done along with original copies to be taken of the documents to the facilitation centers, because if you have not opted for Aadhaar authentication, biometric will not happen, but photograph and documents have to be taken to a facilitation center. Then there was no process for taking registration on the e-way bill website if you are unregistered. Now you can file ENR03 form. Even if you are unregistered, you can still file. Handicraft goods interstate, those who are not required to register, they can also file this form. And once they file this form, they will be able to generate e-way bill. Wherever there is 7374, add 74A. Now, if the supplier is unregistered and it's a case of RCM, recipient has to issue a self invoice. Those suppliers who are taken registration only for TDS, they will be regarded as unregistered person for this provision. Plus, GSTR 7, even if there is no deduction, you have to file a nil return, that is GSTR 7. So the late fee for nil return will be 0. So these were the amendments which have taken place for year September 25. Wishing you all the best. In case you have not seen the May 25 amendment video, that is also there on the JKSC YouTube channel. You can have a look at it as well. Wishing you all the best. Take care. Bye bye.